Hello everyone, this is Ben with Income Options Trading, and in today's video I want to go over opening up a short strangle in the MNQ, which is the micro NASDAQ futures. So before I get started, just a quick disclaimer that this is not financial advice and options are risky and you should know what you're doing before you put on a trade yourself. So I like to use /MNQ, which is the micro NASDAQ future, for a short strangle. That is one of my core strategies. I usually have one on all the time. My last MNQ strangle came off last week, so I thought I'd do a video here today going through and putting one on. So for this video, I am using the Tastyworks software. I have a referral link in the description below. Now till the end of the year, if you open up a new account with $10,000, they will give you $500. So I think that's a pretty cool promotion. So if you have questions, let me know. Otherwise, my referral link is in the description below to get that promo. So in Tastyworks here, I'm going to type in /MNQ. So the / just indicates that it's a future. I did another video on an introduction to futures. If you haven't seen that, I would recommend checking that out. If you haven't done a future before, MNQ is a fairly small contract. I would actually recommend probably starting with the /MES, which is the micro S&P 500 future. That's a little bit smaller, has a little bit less volatile movements, doesn't move quite as quickly. But MNQ, it moves a little bit more, so the premium's going to be a little bit higher. So I like to do the MNQ. So if you have a larger account, you can also do the bigger contract, which is the E-mini NASDAQ, which is /NQ, and the /MNQ is technically the micro E-mini. So in here, it's a little bit different than stocks. If you're familiar with stocks, the MNQ for every point, which means for every dollar, the MNQ option or futures contract is worth $2. So today, $130 change corresponds to $260 if you were long or short one futures contract. So same thing with the option prices here. So if I go to the 60-day, which is what I'll probably end up going. So if I open up the December 17th chain here, you can see these prices here. So if I go to, say, the 200 points on the bid, this is going to be $400 in real value. So you can see this on Tastyworks here, the max profit. If I sell this short put, it's $400. So that's one thing that's actually quite different on futures compared to stock, is with an option on an equity, this would be a 100 multiplier, but for /MNQ, it's only a 2 multiplier. So it's a little bit different. The Tastyworks platform makes it pretty easy. You can see here your max profit of $400 and your max loss of $28,000 if this product goes to zero. So this would be your notional value of here. One MNQ future is equivalent to about 80 shares of QQQ, which is the ETF equivalent. I can go through that later as well. So one thing that I like to use the MNQ for instead of the equity QQQ is the span margin. So if you haven't dealt with futures before, span margin is something that futures use. Your span margin is basically your one-day risk. So when you do an option on an equity, your buying power effect or your reduction is based on the price. It doesn't really look at volatility. Span margin does. Also with the equity world, your buying power reduction is based on the entire life of the trade, whereas span margin looks at just really your 1 day max risk. So you don't want to be over leveraged with futures, because your span margin makes this a more leveraged, very efficient way to trade. So if you're new to futures, you want to stay extra small, just do one lots. If you wouldn't sell an option in QQQ, then I would not do it in MNQ. But if you're comfortable with doing naked options in QQQ, then you could do it here as well. So for the short strangle, I like to be a little bit more aggressive. Depending on your personality, you can adjust your delta. So I like to be in the 20 to 30 delta realm for both the short put and the short call. On the short put, I usually like to go up to the 30 delta. So I'm going to move this down on the screen, up in price. I'm just going to round to the nearest 50. So this is a 30 delta put at the 14,650 mark. You can see my max profit is 509. Max loss if it goes to 0 is almost 29,000, and my buying power reduction is almost $1,300. If I go to QQQ, just for comparison, if I go to the 60 DTE, I sell the 30 delta option. It's not exactly 1-for-1, but you can see my buying power effect is almost $6,000. So the M&Q is much more leveraged, much more efficient, use up capital. You can see here 1,300. So a lot less. That's why I like to use M&Q. But you have to be careful. Like I said, futures have a lot of extra leverage. So if you get too large, it can really blow up your account. So make sure you're really comfortable with futures before you get too big. Let's go back to the M&Q here. So like I said, I like to sell the 30 delta put. On the call side, I like to be a little less aggressive. I'll go between 20 and 25 usually. I can see what kind of premium I get. If I go with about the 20 delta, the 1650 mark, you can see down here I'm getting 101 points, which is about $200. That's not too bad. If we go up to the 25 delta, which I would go to, probably go up to the 15,900. We're looking at 143 points, which would be the mid here. So you're looking at about $280 for this one. So about an $80 difference. You could go either one. If you're a little bit more bearish, you could go with a higher delta. I think I'll do that. The market is kind of rallied here a little bit. If I go to the chart here, and I can zoom in to the last couple days, we got down to the 14,400 mark, and we're approaching the 15,300 mark now. So maybe we'll have a little bit more of a pullback. So I'll be a little bit more aggressive on the call side. Again, you can choose whatever delta you want. If you're doing short strangles on other equities, you can use the same type of setup that you have going on with that. So not a whole lot different between equity and futures. The big thing is to not get over leveraged, like I said, because of the span margin. So at the M&Q, you're going to have to give up a couple points typically. With this being $2 a point, it's really not that big of a deal. So that means every time you down tick, so every tick is 0.25 or 1/4 of a point. So since 1 point is $2, every quarter of a point is 50 cents in real dollars. So I'm just going to go down to 397 here, give up half a point, which is $1. So that would be the equivalent of going down a penny with an equity. So if I go down another point, that's another $2. So now I'm giving up 3 cents or 3 cents of there I was filled. So I gave up essentially the same as 3 cents on the equity side. So only $3 I gave up to get filled. That's really not that big of a deal. Some people get caught up in the larger point totals, but it's really not that big of a deal when you're taking in almost $800 here in actual credit. So now that I have the short strangle on, that's kind of the easy part of the trade. I like to set a closing order at 50% profit. So you can go in and close and manually change this to whatever you want. Or with Tastyworks, you can click on each spread here, right click, close profit 50%. You can change this to whatever you want and go through. It's 198. You can go up to 200. I like to be a little bit more aggressive, so I'll go down to 195 just to make it a nice even number. Review and send order. So now I have that in. The one thing with Tastyworks is they don't have GTC orders. So you can see when I put this in, it's only a day order. So every day at 4 p.m. Central, all the orders will get canceled, and then the market opens up again at 5 p.m. Central Time. So anytime after 5 p.m., you can go in and reset your orders. What I typically do is I go into the activity tab here, and you can just have canceled and working on here. And you can see at 4 o'clock, you'll see that the trade has been canceled. So if I wanted to redo this order here, I can just right click, do similar order, and click review and send. So that's one bad thing about GTCs with Tastyworks right now. I think they're planning to release that by the end of the year. Hopefully that actually gets through. Otherwise, maybe Q1 of next year. The reason they don't do GTCs is because then the order has to sit on the Tastyworks server. So any day order gets put out onto the CBOE server, which is the exchange that handles these futures. But if they do GTC, then there's some things on the back end they have to do, and a little bit more liability. So they want to make sure that they've got that straightened out. So that's why we haven't seen GTCs yet. Hopefully soon it would help with futures quite a bit. So that would be the easy part if this just comes off at 50%. The managing part is if the deltas get out of line. So on Tastyworks, this shows the ETF equivalent. So in this case, the ETF equivalent is QQQ. So sometimes if you hover over this, it'll tell you what the ETF equivalent is. It's not doing that for me now, but usually it shows up as QQQ being the ETF equivalent. So the ETF equivalent is about 3 shares of QQQ. So right now it's not very directional. If it got up to 20 or 30, that would be more directional. What I like to do for my short strangles, and whoops, wrong one here. If I open up MNQ again for my personality, I like to adjust when the deltas overall get to between 20 and 30. So what I mean by that is right now the 15,900 would be negative 26 deltas because this is a short call, so it's bearish. So that's negative 26. And up here, the short put is positive 30. So right now I'm about positive 4 delta in MNQ. And the reason that it's different than this number here is this is showing the ETF equivalent, whereas on the option chain, it's based on the actual future. So right now I'm about long 4 delta in MNQ. If this gets up to 20 or 30, I will roll the untested side, and I will try to reduce my deltas by about 50%. So if the market moves up, that means that my short call delta will increase in magnitude. So this might get to negative 40, let's say. And if this goes to negative 40, my short put, right now it's a 30 delta, might go to say 20 delta. So then the difference between the negative 40 and positive 20, that would be negative 20 delta. And if I didn't want to be the equivalent of short negative 20 shares, there's not really shares in futures, but negative 20 delta in MNQ, then I will roll that put up to reduce my delta. So if I wanted to reduce my delta by 50%, I would roll up the put 10 delta so that my net delta would go from 20 to 10. So that's the case. I would cancel this order and then I would just roll this up. So basically all rolling is buying back the short put, selling out a new put, and the delta would be a 10 delta difference. So I'd buy the 30 delta, which would actually be the 20 delta in time, and I would go up 10 delta. So in this case, I would go up to what's shown as the 40 delta. Like I said, sorry, I'm being a little bit confusing, but if this was 20 delta, I'll roll up to what would be the 30 delta, and roughly I've been seeing about 90 cents of credit as I've rolled some of my MNQ futures last week. So that's kind of in line with it. And then I would, after I do that, go back to your positions tab. This position will update and you can do a new order. And I usually don't do 50% on the new net credit. What I'll do is I'll look at what the price was that I wanted before, and then I'll add in the credit of the new one. So if I roll this and get, let's call it 90 cents, or excuse me, 90 points, which is actually $180. If I go here, if I take 195 and I add 90, that is 285. So I would set my new one at 285 when I close this. So I would just put that in, review and send, and then every night or every morning I would have to go back in and do a similar order and review and send just to push that through again. So that's what I do for managing. I'll go inverted once. So if the market keeps moving against me, I'll keep rolling my puts until I'm at the straddle. And at that point, if the market continues to move against me, I'll go inverted once. And inverted just means that your puts are at a higher strike than your call. And once I become inverted, then my next step would be to roll out in time. So hopefully it doesn't move too fast against you, where you might be at say 30 days to expiration by the time you go inverted, so that you roll back out to the 60 days. If you had a very quick move, that would be very unfortunate. It hasn't usually happened recently. Volatility has stayed pretty high. Pre-COVID, when the VIX was in the teens, there was a little bit more risk for a higher move, but now the premiums are kind of baked in, so that higher volatility, you get paid extra for that. So a 2 standard deviation move is even greater now than it was pre-COVID. So that is the MNQ short strangle. I manage it like the tastytrade mechanics with other equities. It's just a little bit fancier with it being in a futures product, and with the span margin, the buying power reduction is much lower. So like I said, I like to have at least one MNQ short strangle on at each time. That's one of my core portfolios. It doesn't move quite as fast as some of the a stock or an equity underlying. A 2 or 3% move might happen, but you're not typically getting the the 5 to 10% moves like you could get in like an AMD or Netflix or something that's tech related. So that's one reason that I have it in my core portfolio. Like I said, I also usually have a MES short strangle on as well. I'll do another video on that. It'll be similar to MNQ. The only difference is the notional value, and that one MES point is worth $5. Like I said, MNQ is every point is $2. That is the multiplier. So it's a little bit different, but the same mechanics apply there as well. So I think that about covers it. If you have any questions, please leave them in the comments below. If you like this video, hit like, hit subscribe. That helps quite a bit. I also have a Discord channel where I share all my trades, provide my trade logs, answer any questions that people have. It is $10 a month. You can sign up through my YouTube Gold membership, and if you connect your YouTube channel to Discord account, you'll gain access to that server. It's a cancel anytime. It's only $10 a month, and you can get access to my trade log. So I have that information on there, and you can ask more specific questions on there if you have any. Otherwise, thanks for watching, everyone.